Hello everybody, my name is Rainer and welcome back to this week's video analysis. It's good to have you back once more. This week will be a little different because I would like to do a trade analysis on a crude oil trade which I took some time back in October. So I'll walk you through about how I actually entered the trade, why I enter, how I scale in my trades, and finally why I exited my trade. So before I begin, this is actually the trade log of my crude oil positions before I close them out. As you can see, these are the prices I shorted. This is the date of which my prices I did short. First trade was in October 8 all the way until January 31st, which was the date I last scaled in my trades. So I got in the first trade at $91 and the last trade which I scaled in was about 51.60. So this is just the log of a crude oil trade. And so now let's move on to the charts. So this is the weekly chart of crude oil, and this is actually what I was looking at before I established my first position. So I was looking and realized that crude oil was actually still in the range, right? The highs were here, the lows, the multi-year lows was this level over here. And at this point of time, I noticed that crude oil has broken two support levels. The first one around the 104 level. The second one was around this level, around 97.50. So the next thing I realized is that, I noticed this bearish momentum towards the downside on crude oil, right? You can see that how price, the number of red to green candles, right, is skewed towards the downside. So I had this bearish bias on crude oil going forward. But the thing I was actually paying attention to was actually this level over here. It was a multi-year support. And my thought process is this. If I were to go short, I will be shorting into this support, and if I'm wrong, right, the most I'm going to lose is 1R. So, the support does rebound back and I can stop out. But however, what if the support does break? What if the support doesn't hold and price does trade lower? What is my potential risk to reward then? And if you ask me at that point in time, I really do not know, and to me it was infinity. So on the basis of the bearish momentum towards the downside and the fact that crude oil has broken this first support and second support level, I've decided to go short into the major support over here. I was willing to go short into it. So where did I go short? Looking at that, we have to look at a forward chart. So looking at this forward chart, right, the red arrow, right, this red arrow signifies the level I got short. So this is the first short I got around 91 level. And if you're looking at the forward chart, you notice that price has been respecting the 20 and 50 period moving average, right, this within this region over here. However, my first short was actually a breakout trade. So I traded this breakout, right, this traded breakout when price traded below the low over here, right? When price traded below this low, I traded the breakout towards the downside. So let's see moving forward. So going forward, here is where I got towards my second entry, which is my first scaling trade, right? I got in here. So the reason being was because price has been respecting the 50 period moving average once, twice, and the second time it came back, down here, right, the red arrow, I got short once more, and that was my first scaling trade. Then as you can see, price slowly, what appears to be price formed into a range, right, or triangle pattern, you can notice. So again, there's no reason for me to actually go, I would say, take profits or exit the trade, because right now I believe my stops is somewhere around 89 level, right, where it's about 2 ATR away from the recent swing low over here. So I was still in both of my trades and letting the trade play out. And going forward, you can see here price almost going back to my break even on my second trade, but I believe I was still held on despite the fact that price, you can see the psychological impact you have on traders, whereby you short somewhere around here, price goes in your favor, goes against you, goes in your favor, go against you, goes in your favor, and finally really push against you back towards your entry, or perhaps put you out of the money for a few moments. And what will you do? Most traders will probably scratch the trade and bail out. But for me, I had a firm exit which was 2 ATR above this high over here, so there's no reason for me to actually scratch my trade, and I just held on. And moving forward, you can see price finally break out at this area over here, and price traded lower in my favor, respecting the 20 and 50 period moving average, forming lower lows and lower highs, right? It's very obvious, a series of lower lows and lower highs, and notice how price kept respecting this 20 and 50 period moving average. So again, signs of you to to tell you that, you know, you should be holding on to these trades and not simply just exit when you have a small profit. So that's a hallmark of a trend follower, riding on to your profits and cutting your losses. And here is where I got another scaled in trade, which is this candle over here, right? So basically I traded this breakout towards the downside. So when this candle traded below this low, I got short once more. So a thing to note that, you know, I will not be illustrating all the scaled in trades I actually did on crude oil, because the principles are more or less the same. You know, I either traded a pullback or a breakout, so there's no point, you know, going to the exact entries which I did, but I would nonetheless show you the few entries that I did, you know, just to keep it short and sweet. So moving on, you can see price then traded lower, and pam, we have another breakout towards the downside. So another breakout towards the downside over here, and here is where I got short once more, right? When price took out this low over here, I got short. And one thing you notice that, you know, 20 and 50 period moving average, right? Price seems to be respecting the 20 rather than the 50 right now, but I was still looking at it as a zone. So this whole area is still a zone to me, right? The zone where price could be potentially rebound, but clearly the fact that, you know, price is paying more attention to the 20 period compared to the 50 period, but I'm still looking at it as a zone, yeah. So here is where I got short again once more, and the reason is very simple. It was in my zone and it's a retest of this swing high over here, so I got short once more on crude oil. And moving forward, then again, this is very simple, right? Here I traded this breakout of this swing low over here, so I got short once more. And moving forward, then at this point I would have noticed this swing high over here already. So at this point I believe that there will be a cluster of stops above this high. So it was a level whereby I was looking to get short. And here, finally, I got short on my last entry, which is here, whereby I said earlier this swing high, where I believe there'll be a cluster of stops. So I got short. My last shot was on this candle over here. And eventually, at this point in time, I need to let you know that I did not place my entire trailing stops on the 4 hour, but in fact, I placed it on a daily, because looking at the daily chart, you notice one thing. Price has been respecting the 20 period moving average ever since, I would say, over here, right, July 2014 last year. So it made sense for me to use the daily ATR to trail my stops. No doubt that instead of the 4 hour I use on daily, I would actually give back a larger portion of my profits, but that was something that I was willing to gamble with. So I think at one point on time, alright, so okay, let's talk about my stop loss right now. So right now I think you're somewhere around, I exited at 55, right, around 55, which is 2 ATR above the 20 period moving average. And at one point of time I was up as much as 75R. So at $55, I exited with a profit of 45R. So what happened is that I was willing to gamble 30R, right, 30R, because 75 minus 45 will give you 30R. 30R, I was willing to gamble to watch if price would go down lower. It's a little bit aggressive if you ask me, and I think I did a miscalculation. I did not expect it to be 30R, but nonetheless, it was 30R that I was willing to gamble with, and to see if the trade eventually went lower. However, as you both know, price did not go lower, and eventually, I got stopped out. So around here, which is this candle, I got stopped out of all my crude oil positions. I think at one time I was having nearly, 10 positions on crude oil, and I exited this trade with a profit of 45R. So yep, this is one of the bigger trend following trades I had ever since the dollar yen trade. And one thing I would like to share with you guys is that as a trend follower, you are actually going to win less than half the time. Typically, I only win 30% of the time. And not all trades are going to be home run trade like crude oil, like dollar yen. You will have losing streaks. You will lose most of the time. Like recently I mentioned that, I had 8 losing streaks in a row. And that is just part and parcel of trend following. The main gist of it is to manage your downside. When you lose as small as possible. But when you win, you're going to win as much as possible. This is to actually compensate for the little losses that will nonetheless come in your way. So the only way you're going to compensate for all the small little losses that you incur while trading, trading breakout, trading pullback. This will incur the losses because they happen to be a false breakout. And the way to actually pay for all these losses is to actually ride a big trend. And that is what you have to do, ride the big trend, because if you don't ride the trend, there's no way you're going to pay for all these losses. So this is something that I feel is very essential to any trend follower, and I hope you actually take home this message. And I hope you guys enjoyed this video, and if you do, feel free to leave comments or actually email me if there's any questions. Try not to message me on Facebook because I get so many messages that it makes me very hard to actually even bother replying any of it. So I don't really look at my Facebook messages anymore. So yep, that's all I have for you guys this week. Alright, so I wish you guys good luck and good trading. I'll talk to you soon.